You see, when we study a company, there's tons of data available for quantitative analysis. Ratios, balance sheets, cash flows, profit margins, all of that is easy to find. But when it comes to qualitative analysis, especially figuring out whether the management has integrity or not, that's where things get tricky. It takes a keen eye to catch the subtle hint hidden within financial data. Now, big investors often meet management directly. They get a feel for their vision and credibility. But small investors like you and me, we can't do that. We have to rely on publicly available information, and blindly trusting that can be dangerous. That's why spotting a small clue in financial statement can make all the difference between a great investment and a bad one. In this video, I'll share one simple but very powerful way to identify whether management is honest or not. Hi everyone, welcome to FinsetWealth, where we turn finance into freedom. Without further ado, let's head to my computer screen and I'll show you exactly what I mean. This is screener.in. I'm sure most of you already know this platform. If not, you can find plenty of tutorials on YouTube on how to use it. Now let's look at a well-known company, Vedanta Ltd. It's a large cap company, so everything looks solid on the surface. But let's dig a little deeper. Go to the profit and loss statement. Here, look at the net profit for March 2025. It's 20,535 crore. Now move to the cash flow statement. Scroll down to financing activities. And here you will see dividends paid. It is 21,191 crore. Notice something unusual? They paid more in dividends than they actually made in profit that year, or even in the previous year. Their dividend payout ratio stands at 113.48%. You might say maybe they used past reserves, and that's a fair point. But still, 113% payout ratio doesn't make much sense financially. Now look at the promoter holding. It is 56.4%. Sounds good, right? Everyone says high promoter holding means skin in the game. And yes, in general, that's true. But remember, in fundamental analysis, never look at any metric in isolation. If promoters hold 56.4% and the company paid 21,191 crores dividends, that means promoters themselves received roughly 11,952 crore. So what's really happening here? They are paying huge dividends even when profits are not strong enough, effectively diverting company funds that could have been used for reinvestment straight into their own accounts. That's a big red flag. It doesn't automatically mean fraud, but it definitely deserves deeper investigation. So remember, if a company is not making enough profits, but is still paying large dividends, and promoters hold a major stake, then stop and think, dig deeper, try to understand the management's real intention. These small clues can save you from bad investment and misleading narratives. I hope this video gave you some real value and helped you see management analysis in new light. If you learned something today, please like, share and subscribe to FinsetWealth for more such insightful videos on finance, investing and wealth building. Thank you for watching. See you soon in the next video.